Right. As you are aware, the collaboration mainly facilitated the first dual listing that we've had between Lagos and London, with the set-plat listing where over $500 million was raised. And also, what we've also found out is there are a lot of Nigerian issuers with Pan-African perspectives that are looking to access capital from both markets. You also have funds and fund managers that are looking at frontier markets, particularly Nigeria and Africa, who are looking for good returns. And the MOU basically provides them that platform to access our market and be able to invest in Nigeria where they would have good returns.
Attorney, that being said, how well positioned, in your opinion, how well positioned would you say Nigeria is right now, our market conditions, state of the economy, to attract that kind of capital?
Right. Capital basically follows products and services that would give investors the ultimate return. And with what is going on in the Nigerian macroeconomy, you have the rates environment coming down. Commodity prices are going up. We have outputs with crude oil prices at its peak, and obviously our reserves are going up. What you will see is with a stable FX environment, you will see mostly qualified institutional investors will be looking at accessing our market to make sure that they invest in this market. So with the current upbeat in oil prices, the macros, the rate environments going down, we are very confident that with this MOU, we'll begin to see those funds that are looking for places where they will have good returns beginning to access our markets.
So the theme of this year's conference is attracting global capital to drive Nigeria's economic reforms and sustainable growth development. But over the past few weeks, you've noticed a dip in the all-share index. We've also noticed demand pressure in the I and E window. So what I'm thinking is, what more can we do to make sure that some of that hot money comes our way and stays here?
Right. The market goes up in cycles, and as you are aware, what also happens is institutional investors always look at policy consistency. Now, what the government is doing, especially with the Forex regime, trying to bring a convergence of the different Forex windows, will basically instill confidence into foreign investors to continue to access our market. And let us not forget that with the boom that we saw in the last few weeks, it's not extraordinary, or we shouldn't panic because a few people are looking to take profit and convert some of those gains that they've made in the market to cash. So what I will say is the environment is still stable. The macros are improving. There's a convergence of the Forex rate. And I have no doubt that in no distant time, we will have a rebound of the markets.
Now, Tony, usually around the world, stock markets reflect the state of an economy. We have major sectors represented in or on the stock exchange, but that is not exactly the case here in Nigeria. We've talked for years about the death of our market and the need to diversify our product offerings and, just make the market a little more deeper and give investors, more options. Do you think that this is something that investors could see as a challenge when they come here?
I don't see that as a challenge. What you've seen is the typical investor that is looking at our market would want to look at equities as a where. But with this MOU, like I said earlier on, we've been able to expand the areas of collaboration to other asset classes. And what you will see in no distant time is products that institutions and investors can be able to access to, first of all, hedge against volatility of the equity market, but more importantly, begin to have fungibility between both exchanges where they would be able to deal with the macros and be able to also deliver good returns to their...
Are there any timelines for when these products will be put on offer, when they'll be ready?
We are working assiduously to make sure that we launch some of our structured products. So we've been working in the last 18 months to make sure that we launch our derivatives products, and we're also making sure that when that product is being launched, investors will be able to access it and be confident that it conforms with best global practices. Also on the debt side, you'll begin to see a increased appetite for Eurobond listings across various issuers. And of course, the issue about green financing with the green bond initiative that the exchange is at the forefront of driving, we should be able to roll out those products in no distant time.
All right, thank you so much, sir.